Happy Wednesday, everyone! Thanks for attending Strategies to Improve Your Credit Score featuring Roxana McKinney. My name is Claudia, and on behalf of the Latinista, welcome! I am now officially the moderator for the Latinista, so you'll be seeing a lot more of me. I'm originally from New York and now converted to an Angelino here out on the West Coast. I'm also a singer, a vegan cook, so you can please check out my recipes on Instagram at the Amateur Vegan Kitchen. For those of you who aren't familiar with the Latinista, we're a national network of Latinas and women of color invested in career and leadership development. Today's guest is Roxana McKinney. She is the founder of Women, Wealth, and Worth, in which Roxana offers financial transformation designed to help women become smarter with their money and demand their true worth in the workplace. Hashtag hope is not a strategy. Hashtag own your worth. Love it. Roxana, thanks so much for being here. I'm going to pass this on to you. And for everyone out there, please feel free to enter your questions on the chat and we will definitely answer them at the end. Thank you, everybody. Welcome, Roxana.
Thank you, Claudia. I appreciate that.
Yeah.
So we're going to get started. Thank you all for being here. And a special shout out to Yai, Claudia, and the rest of the Latinista team for helping coordinate this. I'm super passionate about this specific topic, and we'll talk a little bit more about why soon. But just before we get started, I did have a couple housekeeping things. And the first thing is that I love for this to be interactive. Your questions can allow learning opportunities for other participants. And please feel free to put your questions in the chat. Claudia is going to do a great a favor of checking that for us along the way so that all your questions get answered. We will have time for Q&A at the end. And so no question will go unanswered. And then the other thing is that this is really a safe, judgment-free zone. No question is a dumb question. So please, 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 feel free, have the courage, get the courage to ask away, because we're here to be a resource and give you some really great tips today. All right. Now, there we go. Okay. Oh, a little technical difficulty, but we're gonna, there it goes. Awesome. So the welcome to the Strategies for Boosting Your Credit Score. Again, Roxana McKinney. I'm gonna tell you a little bit about myself. So Claudia, can you go to the next slide?
That would be you.
Oh, is it?
Mm-hmm.
Uh-oh. Hold on. Sorry.
No, it's
okay. Great. I figured it out.
Yay!
So, very quickly about me. I'm originally from Houston, Texas, and moved to New York because I was pursuing a job on Wall Street. And, I was a trader, and I was one of 6 women on an 868-person trading floor and the only Latina.
Wow.
So from the moment that I moved to New York, it was my mission to help advance other women, and especially women of color, in finance. And I then went on to, mainly because all of my friends came to me for financial advice because I was the person working on Wall Street. Meanwhile, my actual job had very little to do with personal finance. But I then went on to seek out wealth management, where I really was able to transform people's lives, really through education, but also by sharing specific strategies that help them grow their wealth. And just 2 years ago, I started Women, Wealth, and Worth. And I call myself a financial coach because there's something very powerful about sharing knowledge with other people where they can really take actionable steps to change their financial life. And that's really what I'm passionate about, as well as I'm a huge champion for women asking for their true worth in the workplace. As you know, the gender wage gap is real. 81 cents for white women, but Latino women were 53 cents on the dollar. And so I really advocate for all of my clients and any young women that I meet along the way that they have to be asking for their true worth. And one of my sayings is that I really want all my clients to be their own financial warriors. And I hope that the tips that I'll share today will also empower you to do the same. So just a breakdown of what we're going to cover today. We're going to start with financial wellness and really understanding what that means. We're going to dive deep into the credit score so you can understand how it's actually broken down. We'll go through some top credit myths and hacks to boosting your score, personal finance resources, specific credit score resources, and actually some more detail into who the credit agencies are so you can be aware. And then we'll wrap it up with some Q&A. And so to get started, what does it really mean to achieve financial wellness? Well, for me, and the way that I work with my clients, it starts with actually having a strategic financial plan. And a result of that is actually that people get organized. And where we start is really wanting every one of my clients to be completely debt-free, whether that's credit card debt-free, student loan debt-free, auto loan debt-free. We really want to lift that weight off of people. And so that's why credit is so important in that journey. The other thing I talk to people about is becoming liquid. Liquidity means having cash that's accessible within, minutes notice. That's really your emergency fund. So we really promote for people to have at least 6 months of living expenses at all times sitting in the bank. I promote saving to your maximum capacity at any given point in time. So I do teach people in terms of budgeting and learning how to save consistently. I consider someone being a world-class saver if they save 20 to 25% of their gross income. And that's really important. And then protecting your todays, protecting yourself. What type of protection do you have in place? That emergency fund that I talked about earlier protects you if you were to ever become laid off or, God forbid, become sick where you couldn't work. And it's truly important. It's how we protect our personal house is through having sufficient savings. So that's a little bit that. And if you're thinking to yourself, well, I want to achieve financial wellness, but what does it really mean to be financially well, or what I call financially fit? The key metrics that I talk to people about, again, is really having that consistency in a savings rate. And typically we'll start with 15%, but the goal is to ramp up to 25% of your gross income. The credit score, we're going to talk a lot about that today, and 750 plus is where I want my clients to be, but ultimately the goal is to be at 800 plus, which is an excellent score. And then knowing your debt to income ratio. When most people get a mortgage, that's when they kind of become aware of this financial ratio. And I think it's important that people are educated on what this actually means. But basically what it is it's your ability to pay back a loan or some sort of debt is calculated through a debt income ratio. And when people take out a mortgage, the banks will look at that. Do you make enough money to cover your expenses and ultimately cover this loan? And so a 35% or less debt to income ratio is what I consider being financially fit. All right. And now we will delve into credit. As I mentioned before, I'd love for this to be interactive. So should you have questions, should I be speaking too fast, or you want some more details on anything that I've mentioned, feel free to ask away, and Claudia will be monitoring the chat for us. All right, so let's break down the credit score. The credit score is broken down with the first thing that holds the most weight is the payment history. So if, God forbid, you have a late payment on your record, it is going to hurt your score. If that late payment happened a long time ago, let's say 10 years ago, it has zero effect. 7 years ago, zero effect. But it's really the most recent late payments that make the biggest difference to the score. And as you move away in time from those late payments, that's when the score then starts to recover from what I call a credit ding. And payment history makes up 35% of the overall score. So it is the largest part of what breaks down the score. The other thing to consider is if you're 30 days late, it has less effect on your credit. If you're 60 days late, a little more negative effect. If you're 90 days late, etc., becomes more of a negative effect. So that's something else to keep in mind. I encourage all of my clients to check their score, to actually access their credit report every year, at least once a year. And for my clients, we're usually doing it twice a year. And the reason I encourage that, and that's something a little bit deeper than just the scores that you would get on your, credit card statement, or even the Credit Karma scores. It's really looking at the report to see what data has been fed to the credit agencies. And the reason I really focus on that is because there could be errors in your report, specifically for any of us that have common first and or last names, which I think within the Latino community there are certain names that are very common. So if you're one of those people, it's even more important because, these agencies could make a mistake. And so if you see something on there that is not accurate, it's really important that you can dispute that. And then also, I think just because we've had so many, IT hacks within the financial services industry, that your data, as much as you think it's protected and all the passwords you have to remember and things like that, ultimately it is being accessed. There's been so many different hacks just in even the last 2 years where people's data has become compromised. So we want to make sure that it's clean and that everything that's showing up there as your data. All right, so now on to another big factor in the score is the amount that you owe. I call this part your credit utilization. And your credit utilization rate is basically if you have a credit card with $1,000 balance and you're using, let's say, you've made a charge for $200 on that $1,000 credit line, then you're using 20% of your credit utilization. And it's really important to know that specific metric, because every time you go over 30% of utilization, so in the case that I just gave you, you got a credit card, the credit line is $1,000. The moment that you swipe more than $300 on that particular account, you're now over the 30% threshold, and the credit agencies start dinging your score. So it's really important to watch that. And it's also really important for that reason for you to be increasing your credit line with the credit cards that you currently own. That will help protect any sort of downward movement on the card. We'll come back to that a little bit later, but the amount you owe makes up 30% of the score. The length of credit history, which is also called credit age for any of you that use Credit Karma, is also really important, because that's the number of years that you've had a particular card, and they do that with all of your different credit cards, student loans, auto loans, mortgage, lines of credit, etc. They take all of that credit history and take an average of the number of years that those lines have been opened. Now, when you close a credit card or you pay off a student loan, generally we will see that credit age come down. And so don't be surprised as a result, depending on where you are in your credit score, you might see your score decrease as a result. And I can answer questions to that a little bit later as well. New credit lines opened. So these are very important as well, as the age, so the amount of time. They also want to see number of accounts to be more, I would say more than 3 accounts when you're looking to build credit. And if you've already established credit, then you really want to hold about 10 separate credit lines at any given point in time to be able to to sustain an excellent score, which I consider to be 800 plus. And then the types of credit you have are also very important. And this is the reason why I often see people will pay off their student loans and be like, yeah, I paid off my loans. And then they're like, whoa, but why did my credit score go down? And the score didn't go down like 3 points or 5 points, but it came down like 20 points. And they're going, WTF, what happened? What did I do wrong? This sucks. And especially if you're trying to buy real estate at that time, it could be really devastating. But really, the credit agencies want to see different types of credit on your credit report. And so different types of credit are things, credit cards are revolving lines of credit, which is very different than a student loan, which is a fixed line of credit, or an auto loan, which is a fixed line of credit, or a mortgage, which is also a fixed line of credit. So seeing that variety is also really important to the agencies. And this also makes up 10% of your score. Any questions on any of that? So next, what we're going to look at is the actual spectrum on the score. And the lowest score is 300. The highest score is 850. And I think there's a lot of varying information out there on what's good, what's fair, what's poor, all of those things. And I think we have to understand what we're really looking to achieve financially and where that score really should be. In my view, any clients who work with me, the goal is 800, hands down. And I just say that because most of my clients are going to be purchasing real estate at some point in their life. And I want them to be able to achieve or secure the cheapest rate of borrow on a mortgage. And that impact can be, dire if you're not at the 800 plus level. If I can ask out in the chat and to anybody here, what type of ways or tech apps or, how do you actually check your credit score on a consistent basis? If people can drop in the chat how they're doing that, that would be great.
I have a Karen Perez. She says Credit Karma.
Credit Karma, awesome. And then I also see Karen put a question in here. All right.
All right. The question is, hi, Roxana. I'm new to school loan just as I got into the MBA program here in Los Angeles. What tip do you have? Yeah, no, right. What tip do you have for when I finish next year to not have this 20-point drop you mentioned?
So the 20-point drop comes when you pay off the loans. So what I would say is if your credit score is 800 and then you pay off the student loans, you're not going to have an issue because it may be like a 5 to 8 point drop, but you'll see it recover very quickly. It's the people who don't necessarily have that excellent credit yet or trying to build to that. It may not make sense for them to pay off the student loans before they reach that kind of milestone, if you will. And so what I'm saying is, or the other very important thing to note is if you're going to be purchasing real estate and you still have student loans, you're not going to want to pay off the debt until you've secured the mortgage, because you will see a drop if your score is below the 800 mark, which could also affect the rate on the mortgage long term. So did that clarify your question, Karen? You can just give us a...
Oh, she's so sweet. Very helpful. I was actually looking into mortgage loans. So yes, amazing.
Good. I can't stress enough how important in a financial plan, and I think a lot of financial planners don't talk about this, but real estate really is part of, or should be part of, anybody's financial plan, because remember, you can't put all your eggs in one basket. And I think typically people think about 401k as their retirement plan, but we got to build lots of different nest eggs. And real estate is a great one, especially if you live in an expensive rental city like LA, New York, San Francisco, where rents are so high. I can show you how having real estate as part of your overall financial plan is so incredibly important. not only from an asset building perspective, but also from a tax perspective.
That's amazing. Yeah, that'd be great to hear more about.
Yeah. All right. So besides Credit Karma, is anybody using anything else? If you can continue to drop that in the chat, it's just helpful for me to know. I do want to highlight that if people are using Credit Karma, you know that Credit Karma gives you two separate scores. That's TransUnion and Equifax. And we are going to talk about a credit hack a little bit later, but those are the two scores that they give. That's two of the three agencies. And the three agencies are TransUnion, Equifax, and Experian. And what I would say is a mortgage bank is going to use those scores. They're directly from the agencies. And they're not just going to look at one. Like when you apply for a credit card or an auto loan, they might just look at one or two of the agency scores. But a mortgage bank, because they're taking on a lot of risk, they're going to look at all three of them. So it is important to, the reason I like Credit Karma so much, or even Credit Sesame, somebody mentioned that as well, is because they do give data directly from those agencies, which is important in the real estate process. All right, moving right along. The top credit myths. So the big one that I hear the most is checking my credit lowers my score. That used to be the case. Now you can check your credit as much as you want, as many times a year as you want, with no negative implication. Every time you check your credit, whether it's on Credit Karma, whether you go to the agencies directly, like their websites, whether you enroll in an identity theft protection program that provides a score, all of those are soft pulls to credit. Now, when you go to purchase a car or a mortgage, or you apply for a mortgage or a credit card, all of those are hard pulls. And then for people that are renting apartments, you probably already know this, but they also pull credit. So you got to be very careful about how many hard pulls you have in a given year. And so that's why I like Credit Sesame and Credit Karma, because they really outline that in a very easy to read way. But that's one of the biggest myths. Second one is carrying a balance on my credit card boosts my credit score. Carrying a balance doesn't. I think people confuse this with inactivity on a card. So if you have a card and let's say you've just become debt-free, so you're trying to really be wise with your credit usage, then I would say it's smart to put maybe like a recurring charge, like a Netflix or a utility bill on your credit card, just so that it stays active if you don't want to use credit because you're, kind of trying to be debt-free going forward. But carrying a balance, meaning like you swipe, you pay, you swipe, you pay, that doesn't bring any negative effect to your credit. If anything, it actually, does help show more credit history. But you definitely don't want to carry the balance forward, because then you'll be charged interest and you could see a negative effect to credit.
I have a question on that.
Sure.
For carrying a balance, so would you recommend having a zero balance as much as possible? Or like how you were saying, you charge and then you pay, even though that's not affecting it, but you wanted to keep it clean?
Yeah, I mean, I like the charge and pay. For people that are a little bit below the 700 mark, then I actually encourage them to make mid-cycle payments. So that means if your credit card was due on the 1st, then make a payment on the 1st to pay off the balance in full, because that's the responsible thing to do.
Right.
But then if you charge more things between the 1st and the 15th, make another payment on the 15th, and you'll really see that your score will get that extra boost. But that's really for people that are in the 700, right below the 700s. If you're already kind of like in the 700 to 800 range, then that strategy doesn't really give you much boost.
Okay, thank you. That was great.
No problem. All right. So now the other one is that my income impacts my score. And your salary, while it will impact your credit line, so how much capacity the credit card company will give you, it does not impact your score. So when you apply for a card, there's really three things that they look at. They look at your income, they look at your credit score, and they look at your your rent or your mortgage payment, because they want to know that's usually people's biggest payment. And they want to know that after you make that big payment, are you really going to have money even left over to be able to pay this card back should you use it? And so that's when income comes into play. Going forward, myth number 4, my employer can see my credit score. In New York, they cannot pull credit as a result of the employment process, but I know other states do still have that that policy in play. It's seen to be discriminatory, especially to people of color, so they've taken that away, at least in New York, and I believe California as well. But generally, they can see your credit report, but they cannot see the actual score. If for the states that don't have that law in place. So just food for thought that they're not actually seeing the score, they're just seeing the actual data on the report. Student loans don't affect my credit score. That is not true. We just talked about that. Paying off student loans, depending on your score, will affect the score negatively if you don't have other fixed rate of credit lines on your report. So I said WTF, but yes, it is true. And I have seen it happen. Oh, excuse me. So getting married will merge my credit score with my spouse. Wrong, not true. You have your own credit report and that stays unique to you.
I think we'd all be married if that was the case.
Right. Closing credit card improves my credit score. Well, it depends. I would say it depends on how many lines of or accounts you have open, and also how long you've had those accounts open. Because remember, credit age and the various types of credit, so having varying types of credit on your score, are all things that help. So, closing a credit card in general does not improve the score. But if you're in the 800 plus mark, then it could be true. All right. So before I move to hacks, because I do see we're getting close on time and I want to make sure we get as much time as possible for questions. Any questions on any of the myths? If you can put them in the chat and we'll make sure we monitor them. So hacks to boost your score. These are some great hacks that I've used. I've had hundreds of clients have at least a 50-point increase in score within just a few months. So these are things that are tried and tested with hundreds of people who, came to me with debt or just really hadn't paid attention to the score, and we got them using a lot of these hacks, and were able to boost the score 50 points or more in record time. So number 1, you want to keep at least 3 major credit cards at all times. And then if possible, if you're below the 700 mark, definitely keep the student loans or auto loan or the mortgage or whatever the fixed rate of credit lines on your report before you start paying that debt off, especially if you're getting a mortgage, and we'll talk about why. Utilize 0% balance transfers. I've had tons of people utilize this strategy in trying to pay off kind of higher interest rate debt. And we've used these time and time again. It is smart. In general, market standard right now is 0% for 18 months is what I'm seeing. I have seen one specific bank, which was Capital One, offering 21 months. But it's a really powerful tool. And if people have questions specific to that, we can walk through an example so that I can show you what that really means. Keeping credit utilization below 30%. Again, you got $1,000 limit on your credit card. The moment you swipe above $300 on that card, you're now at 30%, right? Or slightly above. So now we got to bring that down, because when the credit agencies randomly check in on you and they see that your utilization is above 30, they're going to start dinging your score. So we don't want that to happen. So please watch the utilization on each of your cards. Now, that isn't true for student loans or for mortgage or for these fixed rate lines. This is really for credit cards only. Increase your credit limits. As you make more money, you can call up your credit card companies and say, hey, I just got a raise and I want to see if I qualify for a credit line increase. Now, an important thing to note here is that they will, in some cases, they do a soft pull to credit. In other cases, they do a hard pull to credit. You want to ask that question before you move forward with it, because if you have too many hard inquiries, which for me, I don't like any of my clients to have more than 3 at any given time, then you might want to wait until one of those hard inquiries fall off. And hard inquiries fall off every 2 years. And Credit Karma and Credit Sesame both do a really good job of showing you that date within the app. Number 6 hack, use a professional to remove negative items from your credit report. I think it's really hard to know who to trust in this space of like credit repair and things like that. But if anybody has questions about that, I do think, especially if you're going to be taking out a mortgage, there's real benefit to paying a company to remove items from your report. And these negative items are things like, let's say you had a missed payment. I had somebody who moved and this medical bill went missed for years and it went into collections. They had no idea about it until we were starting to map out the real estate purchase plan. And I was like, whoa, okay, we got to get this thing removed. So you can pay, typically just for a few $100s, you can pay to have those items removed. And if you're getting a mortgage, that's when it probably makes the most sense to do. Now, student loans, if you've ever missed a payment on a student loan, it's so sad to me. I mean, heartbreaking. But a missed student loan payment is worse than a missed credit card payment, and it hurts your score even more. So that's something that I think also makes sense to see if a professional can help remove from the credit report. Number 7 is close secured credit cards when you no longer need them. So secured credit cards are for people that either don't have credit because maybe they never used credit until they actually started working or post graduate school or undergrad. So if that's you, or let's say you made some mistakes in college, using credit irresponsibly, but now you're trying to get back on your feet. These secured credit cards are what will help you rebuild your credit. And so the way they work is you have to actually give the credit card company the $300, and then you have available on the credit card $300 to spend. And then you got to top it back up and then you spend. So it's kind of that you pay first and then spend, versus a traditional credit card is you swipe first and then you pay.
That's really interesting, Roxanne. I didn't know that was good that you need to close that credit card of the secured credit, because I used to work in a bank, so I know what this is. So
yeah,
it's really good. It's really good, because I'm sure we all keep it open because we're all starting in the beginning, and it's good to know that it's important to close them if you're not using them.
Yeah. Once you've built other cards that are non-secure, you can absolutely close them. And I think it's also when the credit agencies run their algorithm, generally if a secured credit card is on there, it's going to hold you back from getting to the top score.
Oh, okay.
So that's really the reason why.
Amazing.
And then our last credit hack, and I alluded to this earlier, but limiting those hard inquiries to 3. I allow my clients, and we're checking Credit Karma and Credit Sesame every single time that we meet to ensure that we're really staying within that boundary. And the reason I say that is if you have more than 3, then typically that's a 8 to 10 point drop if you're 750 or more. But if your score is below 750, it can be even a 15 point drop once you get to the 4th hard inquiry. And sometimes people just don't realize the worst thing that I've had happen to a client is they went to go get an auto loan. And this was before I was introduced to them, but the people at the dealership ran their credit 15 times. And, in the eyes of the salesperson at the auto dealership, they're trying to make sure, they're trying to shop it around to make sure that the person can get approved. But it really hurts your score when you allow all these people to check your credit. And I've seen it happen so many times, and people are just mortified because it's not, when you have 14 pulls to credit, that's not just a 5 to 8 point decrease. That's like a 20 to 30 point increase. And it's really hard to recover from that in a short period of time.
Wow.
Yeah. So All right. Any questions on any of the hacks? I want to make sure that I didn't go too quickly there.
Oh, I think we have a question from
Great.
Karen. I do have one negative mark from my ex-roommate Bill. He used under my name, but that he never paid. But just like you mentioned, it is indeed tough to know which professional company to trust to help remove this mark. Is there someone or a company you recommend for me going to?
Yeah. Why don't you? I'm going to put my info in the on the screen before we get off. Email me before I send you to someone. I would want to see your Credit Karma screenshots just to make sure, because remember, after 7 years has passed on that negative remark, it's going to fall off anyway. So unless you have a immediate need to do it, you might not need to pay anybody to get it removed. It might just, you might be like, let's say you're in year 5.5, then, and you're not planning on purchasing real estate in the next few years, then, why pay somebody? It'll fall off and it'll be fine. But I'd want to see your actual like Credit Karma screenshots to guide you in the right direction, because you might not need to come out of pocket on that one.
Perfect. We have another question from
Sure.
Claudia. I'm working on paying off credit card debt. Is there a way to call the banks and ask to lower the interest rate while you're paying the credit cards off? Also, do you recommend keeping them open once I finish paying off one? I almost finished paying off my first big one and they increased my credit line by $2,000 while I was paying it.
Oh, good. I like credit line increases. Remember, credit line increases are helping your score move to the next level. And if you're like, let's say, I don't know, after COVID, you're planning this awesome trip to Bali. Well, if your credit line is $1,000 and the flight costs $800 and you're putting it on your card to get miles or points or whatever, that's going to affect you negatively. And so that credit line increase of that extra $2,000, then when you make that large purchase, it's not going to affect you as negatively. So the credit line increases are actually really important to moving you to that next level in your credit score. And we can talk, if anyone wants to share a specific scenario, I'd be happy to walk them through some hacks there as well. And we'll have time for that, I think, at the end, which is pretty powerful. All right. So just to wrap up, I am going to go through some resources, and most people kind of know these. So from a personal finance resource perspective, I really love Smart Asset. I think they really put out some genuinely good content that is very objective. So if you're looking for a resource to know kind of how to get into some of these hacks, whether it be about credit, student loan debt, I think it's or even purchasing real estate, I think it's a really good resource to go to get real information. Financial Gym is another resource that I love. I've had clients come to me from the Financial Gym, almost like graduate from them. And then, so I like them as well. And then NerdWallet has some really good credit card comparisons screens. So I really like them for when you're looking to optimize, whether it be for miles or points or cash back. It's a really good way to go and just compare to find out what cards to apply for when you're ready. And then credit score specific, I like Credit Karma and Borrow Well. But when we're talking about the actual agencies, I really like for people to know who they are, one, because they're the only ones. It's pretty much always been these three. But the biggest hack that I have of most recent is Experian is doing this thing called the Experian Boost. You might have seen the commercials around it, but I've had clients get a 10 to 12 point boost in their score just by going on and applying for it. It's totally free. And I think that maybe because, TransUnion and Equifax have been more on the forefront of giving access. Experian is just trying to promote themselves a little more to get more into the general mainstream of the public. But I definitely encourage everybody to do that. Like I said, when you get a mortgage, which is one of the, biggest checks you'll write in your life, and also the reason why the banks take on so much risk, they have to check all three of these. So it is important, even though Credit Karma is giving you TransUnion and Equifax, if you're preparing to make a real estate purchase and you are going to take a mortgage, you want to know what your Experian score is too. Because they're not looking at FICO or any of the other scores. They're really looking at these three agencies' scores directly.
I have a question. For those three, TransUnion, Equifax, and Experian, I know they offer you to lock your credit so no one can check it. Is that something you recommend if you're not using it for credit card or any of this? Do you recommend locking it just for the safety of it?
Yeah, I mean, I've had people lock for a few different reasons. One of the reasons I've had a client lock their credit is because they had been compromised. So their identity was stolen. And we just wanted to be, after we corrected everything, which is such a pain in the what, we did lock her score for 8 months. And then we released it to purchase real estate, and she's just relocked it again because she's completed the real estate purchase process.
Okay, good.
But I would say that the other reason people will lock is if they are on their way to a purchase, or if I've had a client who got a divorce and her partner had been using, kind of like someone mentioned that somebody had use their name for either a credit card or a bill.
Right.
In that case, it also does make sense, which is an identity breach at the end of the day. But in this particular case, the woman was getting divorced and she knew that her partner had access to her info and had not been forthcoming with having used her data without her knowledge previously. So that would be another reason. Awesome. And then lastly, we'll go into Q&A, and then I have a wonderful giveaway for everyone here. So I'm super excited to announce that. And again, just really excited. I really nerd out on this credit stuff. So afterwards, feel free to contact me with any email, with any questions you have. And if anybody wants to share their specific scenario, I'd be willing to give some free individualized advice. So definitely.
Great. If anyone has questions, please enter them. I know Karen and Claudia have been great. If anyone else has questions, but I have questions in the meantime for you while we wait. One is for this era, right? Half of the country is unemployed. Right now, you're scrambling for money, paying your rent and food and so on. How can someone go about that minimum money, that little money they are actually getting, to maybe not, I don't know, save or help them somehow with that little bit to still keep going in those 6 months to a year of where we are now in this pandemic, how to figure out your money situation?
Right. So I will say, one, if you've lost your job or been furloughed and kind of the uncertainty is kicking in, the one thing people should know already is like student loans were paused, no interest from the months of April to September, and they now have been extended to December.
Nice.
So I encourage anyone who has credit card debt, this is a great opportunity to take the payments that would have gone to the student loans and let's put that towards credit card debt, which is accumulating interest of, let's say, 19% or higher. Like that's a total win, right? The other kind of hacks when I'm looking at overall their whole financial picture, I want to look at their taxes. And if they're getting money back, then I have the ability to go through and understand how we can have that money in our world today to pay off debt rather than waiting for the government to give us our refund a year. And if you file in April, 4 months later. So that's another really awesome way to just kind of fuel money towards the debt, which is higher interest. And then, as you come into these windfalls of money, I do have people who are in the entertainment industry in LA, and in some cases, the unemployment for, I think, with the bonus was more than what their regular income was. So that was a great opportunity to take advantage of paying off some debt. I'm trying to think of some other ways, but I think those are the three that I've been seeing just in this pandemic time where there is some uncertainty. When you are negotiating your way back to the workforce, for people that are in certain industries, there are ways to get sign-on bonuses. So that's also a good way to pay off some debt that people don't normally think about. But yeah.
And on for your unemployment, do you recommend paying the taxes now? Even though I know people are scrambling for money and they want that extra $50, would you recommend paying your taxes now or paying them next year?
Yeah, so I would say that it depends. I think if you think that, and I know it's hard to predict right now, but if you're in an industry like, let's say, technology, and you feel like, you've been laid off, but you're going to be able to start working within the next 3 months, then if you have some sort of certainty around that, then I would say go ahead and pay the taxes later. But I think if you're not sure or, don't really have any clear path of what the next opportunity, like people in entertainment, I would say let them take the taxes now. Right. And, that's kind of the way that I play it. But.
Ooh, we have another question. Claudia asks, would you recommend I call banks to lower interest rates as I pay them off? Oh, that was part of her question.
That was part of your question. I'm so sorry, we forgot that. So generally, I am seeing that they're not lowering interest rates. And I think that's counterintuitive to people because they're hearing, but the Fed brought down interest rates. And as a result, mortgage rates are also lower. So why aren't credit cards lower? And I think that I have had people call the credit card companies and get the payment push during COVID. So I would say in that case, if we were looking at the different credit cards and, the one that's at 22.9 said, okay, fine, you can, forego, let's say 3 months of payments, and we had another card at 25%, then I would want to take that money and put it towards the one with 25, right? If they're giving us that opportunity. But I am not seeing that credit cards are lowering interest rates right now. I've had 5, maybe 6 people try, but I am seeing the kind of COVID relief, which allows them to not make payments. Now, that doesn't mean, it's not like with the student loans, it doesn't mean that the interest doesn't continue to accumulate. So obviously you should note that. But part of the work that I do with people is really strategizing on which loans we're attacking first and what makes most sense and where we can squeeze pennies. And I find the money.
Fantastic. Let's see. I think I had another question. Yes. For the younger crowd, right? For us, the Latinos, right? Usually our families, we're not given, any information on what to do with our money, any finance advice. So for, I guess, someone who's turning 18 or in their early 20s, how can you start from $0 to building something for yourself in this economy, especially in this year? And some people have jobs, some people don't. Like, what would you recommend to base this kind
of? I think for younger people, just entering college, graduating from college, I think it's important to establish your credit. Now, that doesn't mean go out and apply for 1 million cards, but I think one of the things that we didn't talk about today, which I have had lots of clients who are parents do for their children, and then is a parent, a cousin, a relative, anybody can put you on as an authorized user on one of their cards. And immediately, as you are added to their card, you will benefit from their good credit. So I would say for younger people, it might be, wise to have a conversation with your parent or an aunt or a grandparent and say, listen, I'm trying to build credit. I have 0 credit or very little, credit age. And would you be willing to put me on as an authorized user? What that means is that the parent who puts the child on is going to get, let's say it was a platinum visa, is going to get that platinum visa with their child's name on the card. That card does not have to be given to the child to use. It can be held in the possession of the parent, and automatically by them being associated with the parent's credit, they're going to inherit some of the credit age from that specific, and the credit line and all the good history, they will inherit that. And there's no negative effect to the parent or the grandparent or the aunt, the uncle, the cousin, whoever's putting that on. So I would say that's something I would recommend, is seek out who in your family has been responsible with credit that may be willing to help you out just to get you started. And then just be careful, because I know on college campuses, and I was one of them, like I, applied for the card to get the free t-shirt or the pizza or whatever, the gift card, the Amazon, whatever it was. So don't fall into those traps. I think you got to be really careful and know that, credit isn't free money. It's, and it'll come back to bite you. So
yes. I wish I had you 20 years ago. Like, hey, Roxana, what do I do? But this is, what we're working towards is the next generation, and in our community that still struggles, because I actually know people in their early 20s that they're still the bridge, like how we are the bridge for our family. And it's interesting that we're still working towards getting better, and even though the next generation is still doing it, it's interesting to see, like, oh wow, we're still all swimming through this pool of how to figure it out, our finances, and how do we grow and how do we become better with that when the society we live in doesn't really help promote for that. So no, this is great. I'm glad that.
I just wanted to highlight one other thing. Like, the other thing that I've seen within the Latino community is that it's also sometimes my clients who will graduate from school then are actually helping their parents with their credit to then lead to home ownership, because many times I see that our parents didn't have the opportunity of home ownership, and so now the children are reaching back and lifting the rest of the community up. So that's really powerful, and something that really.
Claudia says financial literacy should be a whole class for high schoolers, and even absolutely.
Oh yes,
we would all be so different.
Oh my God.
But I feel, even though we're older, for some of us, not everyone in the crowd is, but it's still, today is still a new starting point. Today we can start to change our credit. Today we can start to save. Today, so it's not like, oh, well, I'm old, let's wait for the next. No, you still can. And even if you're still struggling 10 years from now, who's to say you can't work to owning a home?
Absolutely. No, yeah. I've had people, and my youngest client is 21. And my oldest is 60. So it doesn't matter. It's never, I always say it's never too early, but it's also never too late. And I think that, I think it's lean on, there's so many resources, especially with technology now. Credit Karma being an excellent one when it comes to credit and really trying to build credit. They've made it easy to be able to break down the score. And then if you can work with a professional too, just to really come up with a solid strategy, especially around student loan debt elimination. I have a ton of clients that, went to law school, graduate school, MBAers, and getting a handle on that and just having a plan of attack. Because if you aren't in the nonprofit space where you could get it forgiven, or you're not a teacher or working for the city where those loans will be forgiven, they will continue to balloon. And you're thinking, oh, I'm making payments, but the balance goes up. Like, what's going on? So,
this is great. I'm glad that I'm meeting you, because I'm definitely going to be picking your brain as I keep building on whatever it is that I'm working on. So no, this is wonderful.
Great. So let's ask if there's any other questions, and then I'll go to the giveaway. That's okay.
Great. I don't think anyone has. I know Karen said thank you.
And
she was going to email you.
Yes, please. Happy to help in any way I can. So The last thing, obviously, thank you so much for participating. And I'd say kudos to all of you ladies who have invested in yourself today to take a moment and educate yourself around something that's so important in terms of wealth building for your future. So thank you for being here. I am so grateful for this opportunity. I would love for you to follow me on Instagram. I'm also listing my website, my email, happy to walk through your specific situation. I am doing something here, which I've never done, so I'm super excited about it. Everyone who follows me on Instagram will receive my debt elimination spreadsheet for free. That's something that's normally not free. So it's something that I've curated where I've helped hundreds of people eliminate debt, and I'm giving it away for free here. So thanks for being here today. And then for the first 5 people that follow me on Instagram, I am doing a free 15-minute mini money consult. So give me a follow, and my assistant Casey will be reaching out to book that with me.
Say that 3 times. 15-minute mini money consult. I love it.
Mini money consult. 15-minute mini money consult. 15-minute mini money consult.
Nice.
Yes. But
look, Karen said she just followed you. She's excited.
Wow. But this is great. I think, financial empowerment, especially in the Latino community, is so important, near and dear to my heart.
Right.
Obviously, the name of my company is Women, Wealth, and Worth, and I really make a big effort to be, speaking about these topics that are so important, whether it's home ownership, credit score, student loan debt elimination, investing, like super important for our community, which is not something that many of our parents know anything about. So that empowerment is super powerful. I talk a lot about the gender wage gap, but when we look at the wealth gap in this country, how whites compare to Latinos, or whites to black, the gap is huge, and I think credit is one way to get you on that right path. So it is something that everyone should be in tune, and knowledge is power. So hopefully everybody took some nuggets away from this discussion today. Again, super grateful to be here.
And I like that you're not a financial consultant. You're transforming someone's finances. And that's all. The words are everything, because that's what you need. You need to transform. You already have finance issues or not. You don't need you need someone to help you transform into something that it is that you're aiming for. So I really love that. And something I wanted to ask you that you did, we're talking about the gender gap, right? The gender gap, right? How does one fight for your salary? We have 2.5 minutes left. Just wanted to I know this is something you wanted to talk about, and I want to hear about it, as I'm sure everyone does. Like, how does one come into the office and say, hey?
Right. So that's a whole other seminar, girl. But I will say it's important to have a plan. So it's not that you just you find out a colleague is making less and you're like, okay, that makes me angry and I'm going to go fight for myself. And you walk in, bust into your boss's office. It does need to be a well thought out strategy. So I actually, I do something called salary negotiation consulting. And that's really where the first thing we start with is the market research, because I work with so many people in similar industries, and that's finance, law, media, tech, and nonprofit. So I have the data of what your kind of salary range should be. Right. And if you don't fall in that, then we can figure out, okay, how much are you off? But I think for people that don't have the resources to potentially hire someone like me, then I'm not a big fan of Glassdoor or PayScale, but there is databases out there that you can check. I can't say they're 100% accurate. And I think as you get more senior in your career, they're really not accurate. So, but I think for younger people, they're a good starting point. And then the next thing I have all my clients do when we're going through the strategic plan on salary negotiation is, reach out to your network. LinkedIn is like such an easy, accessible tool that you can figure out. And I will tell you, people are willing to share this info. I think the misconception is like, I'm not going to tell you how much I make. Oh, and there may be people out there, but there's also people out there who want to help you and who want to like be part of uplifting you in our community. So I would say that that's probably the best place to start. But again, it's a whole other presentation, which maybe I can come back to the Latinista to do.
I mean, Jai is a big LinkedIn advocate, so she's definitely on there. And, I know that's a whole different subject, but at least it allows everyone to know that you also do that. So that would definitely be helpful. And I want to thank you, Roxana, so, so much. Yes, like Claudia said, she loved this, such an important topic. And we're all ever grateful to, because we hear it, but now to hear it from our community, and you're helpful and it's wonderful. So I thank you, Roxana. And thank you, Jai, and the Latinista group for today. It was been nothing but wonderful. And it was a pleasure speaking with you. And again, I'm really happy I got to connect with you today.
Oh, thank you. Thank you so much. Everybody, thank you for joining. Really appreciate it.
Thank you, everyone. Have a wonderful day.